Welcome to the March 2023 Las Vegas Real Estate Report. In this video, I'm going to cover the February 23 housing stats, current market assessment, what's going here in our local Las Vegas housing market, mortgage rates and inflation, how they're tied together, and where are the opportunities, because there definitely are some right now if you're thinking of purchasing, selling, or both. Hi, my name's Jan O'Brien, along with my co-team leader, Cosmo Morabbi. We have an amazing team of local area experts here to serve all your Las Vegas and surrounding area real estate needs. Make sure you reach out to anybody who sent this to you. If you are watching on YouTube, definitely subscribe to the channel below here, get the notifications on. We do this monthly report, post other videos, including shorts, and Cosmo does a weekly report on what's happening with the Las Vegas housing market. All right, let's take a look at what happened in February 2023. Well, guess what? For pretty much 3 months in a row, we're right at 425,000. To be specific, it was 424,995 for the month of February. That's down 5.6% year over year. Cash sales were 27.1%. Short sales and foreclosures had been under 1% of all sales for the last several years due to the mortgage forbearance during COVID and so forth. Ticked up slightly to 1.2% in February, but there's a long time to go. A lot of things have to happen economically, recession, people losing their jobs, and really prices coming down further than they have, because as I'm saying, they're flat now for 3 consecutive months for people to not have the equity to sell their home for the most part. New listings, 2,243. That's down 24% year over year. And units available, even though this number really looks good, it's up 167.9% year over year at 4,665. Let's put that into perspective. Here it is for a breakdown of every month from January to December of 2022. In the last 2 months, you can see that year over year, February, was only 1,741 homes on the market. So it appears like we have a lot of homes, and we do, compared to a year ago. The thing that's a little bit alarming when it comes to pricing and availability for buyers and just sellers being able to get their home sold is the demand is down comparative to last year because of obviously the interest rates. But this column here will show you that we peaked in September for the number of homes that were on the market last year at 8,121 at the end of September. And since then, we have been going down month over month and even week over week, as this shows. So we track the statistics weekly, and this is the week prior to March 15th. And just take a look at these active number of homes available. These are single family homes that were on the market without contracts for the week previous to 3/15. And you can see that that number has been decreasing, through September. Here it is. It was 7,800. It's decreasing every week to the week before last week, 4,284 homes on the market. That median price is staying right around 425. And what's happening is we have this, not a ton of listings coming on the market. And primarily that's because sellers are only selling, in our opinion, if they need to, because they are staying where they're at with their sub 3% interest rates if they refied in the last couple of years. And that's really showing up in the market. Again, follow us on TikTok, living_Las_Vegas, over on Instagram Reels, Living Las Vegas and Henderson, for Cosmo's weekly update if you really want to stay tuned in on a weekly basis about what's happening with the housing stats here in Las Vegas. All right, here's that data, the entire monthly chart, 2022, and where we are in 2023. Just to give it some perspective, we started the year in January, at the end of January last year at 435. Remember, December was 425, exactly where we ended the year at 425. You can see where we peaked here at 482, and then we had a consistent depreciation, if you will, or the sales prices continued, the median sales prices continued to go down. I'll show you why here in just a moment, because we're going to look at the interest rates and correlate this to this 482 back here in May and June. But here we are, staying steady and flat for the last 3 months. I like to give perspective always when I cover this, because if we don't put some perspective historically into where we've been, then the number doesn't really have a ton of meaning. And this chart just shows median sales prices for single family homes since 2012 through 2022. And you can see in 2021 and in 2022, we ended the year. Basically, we zeroed out any gains that happened. Let me just back up. We basically zeroed out the gains that happened in 2022. But let's take a look at what happened from 2020 to 2021. Here's the breakdown on the graphical chart here. That was the median equity gain in 2021 from over 2020 was $80,000. Prior to that was $32,000. And you can see where that has graphically gone up here year over year, where we had this big jump. This was during COVID when we had incredibly low interest rates, super high demand because the money was so cheap. It was so easy to go out and get a loan, not necessarily easy to qualify, just the money was amazing. You could buy a home, but also the prices went up because we had literally such little historic demand, inventory. Just showed you 1,800 homes were on the market back in February of 2022. All right, so let's take a look at the inflation and mortgage rates correlation. So this is a great summary of exactly what I just said, and just to reiterate it again. So home prices surge post-COVID as demand greatly outpaces supply and the low rates increase buying power. That's where we're seeing multiple offers, people just getting super frustrated because there just really wasn't a lot of inventory, but the interest rates were in the threes, they were in the fours, and they went below in the threes. People had 2.75. I mean, it was crazy what the interest rates were, as you well know. So home prices and rents then contribute. So we have this increase. It starts pushing everybody out of the market, including rents. And this all has, contributed to inflation. So decades high inflation is the single biggest reason for the fastest rate spike for interest rates since the 1980s. And then this is where it happened. So this is inflation here. This is the inflation report coming right from one of the economic sites, Trading Economics, U.S. Bureau of Labor Statistics. So here's where we had that spike, 9.1%. The Fed had been, aggressively moving the Fed fund rates, which impacts a lot of short-term interest rates. But the inflation is what the main thing that is having the impact on our interest rates right up in here. And this is where this correlation happens. So 9.1, this is in June, May and June, 8.6, 9.1. Well, let's go over here and take a look at what happened. This is from Mortgage News Daily. This was the FHA. I'm just looking at the FHA rate for Wednesday, May 25th, 2002, 4.7. We move ahead to June 13th. It went up over a point from May 25th to June 13th. And then we spiked up here at 7%. 7% September 27, 2022. So here, let's take a look again. I'm just looking at FHA rates just in this particular video. So here we are from March 17, 2018 to March 17, 2023. And we can see right in here where the interest rates surged upward post-COVID, right? We had a little dip. This is where it hit up there in the sevens. It's come down. And then we recently had the news over various things with inflation not coming down as quickly as the Fed would like. And we sit as of March 17th with no points for an FHA loan at 6.15%. And you can just see the volatility in just a week's time here, 625, 61, 625. The interest rate is moving on a daily basis based on what's going on with mortgage-backed securities, other events that are happening in the economy, the news about inflation, jobs, and now what's happening with the banking crisis that we're in the middle of as we record this March 20th, 2023. So what's going to happen with interest rates? Well, the long term for most folks is if we can continue to bring inflation down. The Fed's goal, of course, is to get it to this 2%. Get it in this 2%, and we should see interest rates come down. And we'll have to watch and see exactly what continues to happen in our economy to impact what goes on with the interest rates. But let's talk about what some of these opportunities are. So if you are currently a buyer, I continue if you're watching these videos for the last several months, I have been saying, and I stand by it, I personally believe there are great opportunities for buyers in this market. And I'm not saying this just because, we'd like you to reach out here and go work with us to make a sale. We are already seeing, since we've been talking about it on our social media channels, the opportunities that were there a few months ago are not as great as they were, meaning particularly in new homes. So my feeling is there are more homes to choose from in the resale market. Builders are still building homes, and I think there's opportunities in both. So let's go through it. So we know that inventory increased and peaked in September of 2022. It continues to decline. But why I feel there's opportunities for buyers is there are a lot of people sitting on the sidelines waiting to see what happens. And what that means is there's less competition at the moment and more opportunities, just in the resale side for the moment, to negotiate on your behalf to get a better price, to negotiate seller concessions, get your closing costs paid for if we can, maybe get the seller to cover the cost of a buy down so your interest rate can come below 6% if you want. Now, personally, when everyone jumps back into the market, whenever this magic number comes that people feel comfortable about jumping back into the market, then there's going to be more competition. It's simple supply and demand, guys. It's economics 101. If we don't have a significant increase in sellers putting their homes on the market, which maybe they will because now the interest rates have come down and they're ready to go buy a house, and it's springtime right now, this is usually we see more activity. But if they don't, or if we don't have enough, I think even if the people do come on, more people put their homes on the market, there's going to be an increase in demand, not just for buyers buying to purchase a home to live in, but investors jumping back into the market, which means more competition. Not as much supply is going to make prices go up, not go down. Okay. In new builds, sales have definitely picked up for median priced and below homes. In fact, there are some communities where our clients we're not able to negotiate for them anymore because they're moving quickly, because of the incentives the builders are offering. You're on a wait list now. Okay, that's not happening across the valley, but it is happening in areas where homes and builders are moving their inventory quickly. However, there are still opportunities, and we just closed on a home for some clients that were able to get $20,000 off the base price, get all their closing costs covered, and get a special interest rate that was like 4.99%. That is still available and out there. But I really do believe the window is going to be closing, because as soon as the interest rates are lower and more people are buying, the builders won't offer the amazing incentives that they're offering now, and resale sellers won't have to give away as much as they are currently. So that is why I feel there's great opportunities right now. So reach out and let us negotiate for the best price, seller concessions, whether you're a buy down on your interest rate, whether you're considering resale or new. Now, this is just an example of opportunities that are available right now as I record this. From five now, there are obviously a limited amount of these funds. It depends on what you're going with. Sometimes they want 10% down, 20% down. There are opportunities for FHA as well, but you can just get a sense here, 5%. Here is a builder that is doing a 3-1 buy down. Okay. The first year is 2.75, then 3.75, then 4.75, and 5.75. Now it's on select homes. It's usually the homes that haven't sold yet, that are sitting there, that they want to get off their inventory. Here's another one, 4.99. This is a 30-year fixed rate. So the opportunity, and this is just interest rate programs that some of the builders are offering. They're still offering incentives like paying 3% of your closing costs, or maybe even we can negotiate more, which can allow, if you don't qualify for one of these programs, to at least get your interest rate down. The bottom line is you got to reach out to us, because we definitely know where these opportunities are and we're there to assist you. Now, if you are a seller, that's just a quick reminder, the market peaked for sales price, for median sales price, at 482. It's declined to 425. It's been staying flat at 425 for the last 3 months. This is what I continue to say, and it will always be the truth. Homes that are priced well, that are in great condition, if they're older, 20 plus years or older, and they've been renovated, those properties are moving because that's what people want. People do not want to move into a home and spend another $50,000 to $100,000 to update or renovate it. Now, there are people who want to do that, but they're going to want a deep discount. There are a lot of investors looking for properties to fix up and flip. But if if you're thinking of selling and your property is in great condition and it's priced well, you could get multiple offers on that still. We're dealing with that right now. We just had a buyer that we put in that it was really well priced. It was actually priced a little bit low to create that sense of urgency to purchase it, and it had multiple offers. Our buyer did not, even though they came above list price, did not get that. So there are still opportunities out there if you're thinking of selling, and it's all about the strategy and reaching out to us and helping us understand what we think your property could sell for. Now, if you need to sell and then buy, I just described what the opportunities are to potentially get the most equity out of your house right now. Be competitive, maybe not get what you would have gotten a year ago, but you didn't sell your house a year ago. You're thinking of selling it now. If you're thinking of selling it now, there are opportunities to put the seller hat off, buyer hat on, and take advantage of that. So contact us, anybody on our team today, to walk through specifically what your goals are and what might be the best opportunity, whether it's now or to wait later. We're here for all your Las Vegas real estate needs. Okay, so thank you for listening. I hope that brings a little clarity to this very chaotic market that we're in. However, we look at the numbers, and the numbers tell us exactly where we are. We can't predict exactly where we're going to be several months from now, but we know based on looking at it weekly where we're looking for the next week to maybe month or so. Make sure you reach out, connect with us on social, subscribe here at YouTube if you're watching from YouTube. We have 2 TikTok channels. We're over on Living Las Vegas Henderson, also in Instagram. So until next month, this is Jan O'Brien. We will see you and keep you updated on what's happening here in our Las Vegas real estate market.